At risk of being Captain Obvious, 2022 was not a good year to be an investor. In fact, 2022 ranks as the 7th worst year in history to be a stock investor. If that wasn't depressing enough, 2022 ranks by far as the worst year ever to be a bond investor. In 2022, the S&P 500 index declined 18%. The tech-heavy NASDAQ dropped 33%. And the U.S. aggregate bond index lost a record-setting 13%. Inflation was the main theme of 2022 as everything from home prices to food became considerably more expensive. This forced the Federal Reserve to take action and aggressively raise interest rates. For example, the 2-year Treasury started the year with a yield of 0.8% and ended the year with a yield of 4.4%. As interest rates go up, bond prices decline. With such a big move higher in interest rates during 2022, it's little surprise to see the bond market record the worst year in history. Now some good news. With 2022 ranking among the worst years to be an investor, it would be very rare to repeat the negative returns the following year. In fact, stock declines the magnitude of 2022 generally turn out to be very good opportunities for long-term investors. What can investors expect in 2023? 2023 is likely to be a story of two halves. The first half of 2023 is expected to bring much volatility as economic reports should be mixed. Some reports will show inflation is still prevalent and further Federal Reserve tightening is needed. Other economic data will show signs inflation is waning and the Federal Reserve can take their foot off the gas. The second half of 2023 is likely to be a recovery period for the economy and stocks. Investors will begin to look beyond inflation and focus on a recovering economy. The recovery will be slow, but the mere anticipation of a recovery should bode well for stocks. Be patient during periods of market volatility as mixed economic data is common in a transition period. Your patience during volatile markets will serve you well. From the One Digital Wealth and Retirement teams, thank you for watching.